Welcome to the deep dive. Today we're zeroing in on a really interesting story from the travel tech world. It's about the Travenues Technology. You probably know them better as iXIGO.
That's right. And look, we're not just going through some standard quarterly report here.
No, definitely not.
This is about a company making a huge, really huge forward-looking bet. A bet on AI, backed by a pretty massive capital injection.
Exactly. So we've got their Q2 FY26 results, yes, but also this big announcement, an INR 1,296 crore fundraise. Our mission for you, the listener, is to kind of cut through the noise here.
Yeah, understand the numbers, sure, but maybe more importantly, figure out the why. Why is a company that's already profitable, already cash flow positive, raising this much money right now?
And how does it all connect to their goal, their stated goal of becoming an AI-first travel platform?
Right. We've got the earnings release, the investor decks, and some really key insights from the management call. Aloke Bajpai, Rajneesh Kumar, Saurabh Devendra Singh were all on there.
So this deep dive, well, it's really your guide to understanding how tech is just completely reshaping one of the fastest growing consumer areas out there.
Okay, so let's kick off with the financials. The Q2 FY26 scorecard, comparing it back to Q2 last year. And, the results, they show some pretty strong momentum operationally.
Yeah, like the gross transaction value, the GTV, that grew, what, 23% year over year?
Solidly. Crossed INR 43,474.97 million. That's impressive scale.
And the growth engine seems, well, like it's firing on all cylinders. Revenue from operations grew even faster, up 37% year on year. That's over INR 2,800 million. They're accelerating revenue.
Right. And the metric that really signals underlying health, I think, is the adjusted EBITDA. That grew 36% year over year, too. So they're managing scale and efficiency.
They are. But you mentioned context. There's one number that might throw people off a bit.
Yes, exactly. We need to talk about the reported profit before tax, the PBT. If you just glance at it, it was actually negative, showing INR 24.88 million.
A loss. But wait, you just said revenue and EBITDA were up strongly. How does that square? What's causing that red ink?
Well, it boils down almost entirely to one single thing, a big non-cash event.
Okay.
They had this ESOP accounting charge, that's employee stock options, for INR 269.30 million. Now, this wasn't cash going out the door for operations or marketing.
Right.
It was a paper charge. And it got triggered because the company hit a specific, pretty ambitious performance target ahead of schedule. They crossed a market cap of INR 9,000 crore.
Oh, okay. So they were kind of penalized on paper for succeeding too fast,
No.
hit a big valuation goal, and bam, a massive accounting hit for past employee rewards.
That's a perfect way to put it. It's non-cash, non-recurring. If you just back that ESOP charge out.
Yeah.
The underlying profit before tax would have been a pretty healthy INR 244.42 million. That's actually a 26% increase year over year in core profitability.
Okay, that makes a lot more sense. It really highlights why you got to look past the headline numbers sometimes.
Absolutely. It separates core operations from accounting quirks.
Which sets the stage perfectly for talking about this huge capital raise, INR 12,296 crore.
Yeah.
Like you said, the company's stable, profitable, cash flow positive. So this isn't about survival.
No, not at all. This feels like an offensive play, a strategic move.
So who's putting up the money? And what's the thinking behind it?
The investor is Prosus through their MIH Investments 1BV arm. Now, Prosus is a major global tech investor. They've got a serious track record, especially with big marketplace successes, particularly in India.
So their involvement alone is a pretty big endorsement.
It's a huge vote of confidence, yeah, especially in iXIGO's long-term tech vision.
And management used this phrase, an AI inflection point. They're raising capital to double down on conviction. But, we've seen this movie before in the travel sector. Big capital raises often mean big discounts.
Right, the capital is a moat trap.
Yeah. How are they planning to avoid that this time?
Well, they were very, very clear on this point during the call. They explicitly said, quote, no intention to start any price war or discounting war.
Okay, good to hear.
They seem committed to sticking with a disciplined, unit economic positive strategy. So the money isn't really for subsidies, it's for building stuff for the long-term tech and market infrastructure. And they laid out 4 key pillars for it.
Okay, let's break those down. This is where the strategy gets real.
Pillar number 1, no surprise, AI and technology investments. This is the R&D funding, building those AI-first agentic platforms they keep talking about.
Agentic platforms. We'll come back to what that means. What's pillar 2?
Pillar two is a big vertical focus on hotels. They want to improve the product there, get deeper supply relationships, and this is crucial in what they call peace of mind products. Things to tackle the, frankly, lack of customer trust in the budget hotel space.
That makes sense. Hotels can be tricky. What about pillars 3 and 4?
Third is inorganic expansion, so acquisitions but selective ones.
Right.
They have a disciplined playbook here, looking for companies that are already profitable or very close, bring strong tech or talent, and importantly, fit culturally. It's not just buying growth for growth's sake.
Strategic enhancement, not empire building.
Exactly. And finally, pillar four is just working capital, which, is necessary as the main OTA business scales up. You need more cash to handle prepayments to airlines or hotels, manage bigger ad campaigns with banks, that sort of thing.
Got it. So let's circle back to Pillar 1 AI. It feels like this isn't just a focus, it's the focus. They're talking about AI, not just as a tool, but almost as replacing the old way of doing business entirely.
That's the vibe, yeah. They see travel apps moving beyond just showing you options. They envision them becoming these, smart, personalized agents.
Agents that don't just suggest stuff, but actually do stuff for you. Take actions.
Precisely. That's the agentic part. They actually trace this idea back quite a few years to an assistant they built called Tara. But it feels like the current wave of generative AI has finally made that original vision properly achievable.
So a once-in-a-lifetime opportunity, as they put it.
That's the framing, to fundamentally change how people plan and book travel.
And what's really interesting is how they're tying this AI strategy directly to the needs of the next billion users, the NBU, especially in Tier 2, Tier 3 cities.
Right. Because these users, they don't need to understand the tech, the large language models.
No, they just need it to work reliably, magically even.
Feel its impact in a magical way. That was the phrase leadership used. And they're deploying this AI through what they call a peace of mind stack.
Okay, so what does that actually mean? What does it do?
It means practical, useful stuff powered by AI, like smart fare predictions, their price lock feature, or automated check-in for flights, smart rebooking if your flight gets canceled, voice AI help, instant claim processing if something goes wrong.
So it's about removing friction and uncertainty.
Exactly, taking the stress out of travel's messy bits.
And they have data showing this isn't just talk, right? It's already working inside the company.
Oh yeah, the internal efficiency numbers are kind of staggering. Get this, over 90%, 90.56% of their customer chat interactions are now handled by autonomous AI agents.
The 90%, wow.
Without a human needing to step in. And for voice calls, their agentic voice AI is resolving almost 48.8% of calls end-to-end.
That's huge.
Yeah.
That must have a massive impact on customer experience, wait times, things like that.
Totally. They said 97.4% of calls are now answered within 2 minutes. And remember how painful travel refunds used to be?
Oh, don't remind me. Weeks, sometimes months.
Right. Back in FY21, their average refund time was over 49 hours. 2 full days now. In Q2 FY26, thanks to this AI-driven automation, the average refund time is down to 2 hours and 54 minutes.
From 49 hours to under 3 hours. That's transformative.
It really is. That's the measurable payoff of becoming AI first. It saves time, sure, but more importantly, it builds incredible trust.
And that ties into their whole philosophy, doesn't it? Yeah. About successful companies needing to, reinvent themselves.
Yeah, reinvent themselves and create a new core. Disrupting your own old model with better tech before someone else does it to you. This AI fundraise, it's basically the fuel for that self-disruption.
Okay, let's switch gears a bit and dive into the different business segments. Because the quarter itself had some challenges, macro headwinds and so on. But the stories for flights, buses, and trains are quite different.
Definitely contrasting. Let's start with flights. That segment was a real standout, especially when you consider the market conditions.
Right. Flight GTV was up 29% year over year, and the revenue growth was even stronger. Flight revenue shot up 60%.
60%. Now, here's the crucial context. The overall domestic flight market in India shrank during Q2.
It went down. By how much?
Been about 2% year over year, mostly due to airline capacity issues, plus the usual monsoon season impacts, some runway closures.
So iXIGO wasn't just growing, they were grabbing significant market share in a shrinking pie. How?
It really seems to come down to their strength in that NBU demographic we talked about, their connection with users in Tier 3 cities.
Okay.
They mentioned over 50% of the new flight bookers coming from their NBU-focused apps were actually flying for the very first time.
First-time flyers. So they're tapping into a whole new pool of travelers, not just fighting over the same folks in the big cities.
Exactly. It's a different competitive dynamic. Now, moving on to buses. The growth there was even faster.
Yeah, bus GTV up 51%, revenue up 64%. What drove that acceleration?
Primarily expanding their inventory, they added 7 new state road transport corporations, the SRTCs, to their platform.
Oh, wow, 7 more?
Yeah, they now aggregate supply from 17 major state bus corporations. That makes their platform really comprehensive, and they saw particularly strong demand on routes related to pilgrimage travel.
Interesting, where reliability is probably key.
Absolutely. Okay, finally, let's talk trains. This is their traditional stronghold where they have market leadership. But the growth was slower here. GTV up 12% year over year.
And you mentioned earlier some ecosystem adjustment. That sounds like regulator changes.
It was. Indian Railways made some significant changes that impacted the whole booking ecosystem. This was a defining quarter for them in trains.
What kind of changes?
2 main things. First, reductions in the amount of waitlisted inventory available. Second, new rules requiring Aadhaar-based authentication for booking Tatkal and ARP tickets.
Okay, for the listener, why does less waitlisted inventory cause a problem for a platform like iXIGO?
Because a lot of their value-add services, like iXIGO Assured or their alternate travel plan, rely on predicting the probability of a waitlisted ticket getting confirmed.
Oh, I see.
When the railway drastically reduces that pool of potentially confirmable tickets, it messes with prediction models and changes how people book. They had to scramble, basically, recalibrate their algorithms quickly to keep those services useful.
So they had to adapt on the fly to maintain their position.
Exactly. It shows their agility, I think. They managed to hold on to their market share despite those external shocks.
So summing up the segments, trains showed resilience under pressure, while flights and buses really demonstrated strong organic execution and market share gains.
That's a great way to put it. They adapted where they had to and executed strongly where they could.
Okay, let's wrap up by looking ahead specifically at the hotel playbook. This is a big target for that new capital injection. But hotels in India, that's been a tough nut to crack for OTAs historically, right? Lots of money burned.
Oh, definitely. A graveyard for capital, some might say. But the argument is that the underlying market structure is totally different now compared to, say, 10 years ago.
How so?
Well, back then, the big challenge was just getting inventory online. You had thousands of small, independent hotels, mostly offline. It required huge ground teams for aggregation.
Right, boots on the ground.
Today, most mid-range and budget hotels use modern property management systems, PMS. So accessing their inventory technically is much easier. It's becoming commoditized.
So the competitive battleground isn't supply anymore, it's the product, the experience.
Exactly that. They believe consumers are moving past just hunting for the absolute lowest price. What they value more now is that peace of mind factor, meaning transparency, guaranteed bookings, easy cancellations, fast refunds, trust, basically. And OTAs currently only drive maybe 10–20% of bookings for the typical budget hotel in India.
So there's a huge opportunity still to win over hotels and customers with a better experience.
A massive room-filling opportunity, yes. And this is where the AI comes back in, since they're sort of building their hotel offering more seriously now.
They don't have legacy systems to worry about.
Right, they don't have to bolt AI onto an old platform. They can build an AI-native stack from the ground up, specifically designed to solve those trust issues, make sense of messy hotel data, and personalize the whole discovery and booking process.
Makes sense. Build it right using the new tools from the start.
And one more interesting point on hotels, they're seeing a premiumization trend. Apparently, 37% of their current hotel bookers are choosing more expensive hotels places over INR 7,000 a night.
Wow, really? Over a third?
Yeah. It suggests there's a growing segment of Indian travelers willing to pay more for better quality and assurance, which fits perfectly with their peace of mind product strategy.
That definitely reinforces the investment case. Build the AI-powered trust layer and capture that value-conscious but quality-seeking traveler.
It's a bet on evolving consumer needs meeting next-gen tech.
So, okay, pulling it all together from this deep dive, what you're really seeing is a company executing a strategic pivot. You've got the core business, trains, flights, buses, generating solid, profitable growth, providing stability.
Yeah, weathering storms like in the train segment, gaining share in flights.
And then you have this huge injection of capital, explicitly not for discounting, but earmarked for these big long-term bets, primarily on AI and cracking the code on hotels.
Their calculation seems pretty clear. Prioritize long-term category leadership driven by AI over just maximizing short-term financial metrics like return on equity. It's balancing today's performance with building tomorrow's advantage.
And that strategic view, that focus on the future of AI, brings us neatly to our final provocative thought for you, the listener. It's based on something the leadership team reflected on this quarter.
Yeah, this idea that we're probably, right now, using the worst AI we'll ever use in our lifetimes.
Think about that. From this point on, it only gets smarter, maybe stranger, definitely more capable.
So the question for you to chew on is this.
Hmm.
As you go about your day, your work, what routine, what business process, what tasks that you do regularly, maybe something complex or repetitive,
Mm-hmm.
do you think is most vulnerable, most likely to be completely changed, maybe even disrupted by this rapidly improving AI tech, maybe even just over the next year or so?
Something to think about. What part of your world is AI coming for next? That's definitely something to consider until our next deep dive.